Have you ever wondered why 90% of retail investors lose money even when they are highly intelligent? The answer is not found in your knowledge of the stock market, but in the very wiring of your survival instincts. For thousands of years, your brain was programmed to fear the unknown and run from danger. In the wild, this kept you alive, but in the financial markets, these same instincts are a death sentence for your wealth. When the market drops, your biological survival mechanism screams at you to get out before everything is lost. When the market surges, that same brain tells you to chase the gains before you are left behind. This is the cycle of fear and greed that turns smart people into poor investors. In 2026, the markets are moving faster than ever before, and the gap between those who use logic and those who use emotion is widening into a canyon. If you continue to trade with your heart, you are essentially fighting a high-tech war with a wooden stick. But today, I want to show you a different way. I want to introduce you to the anti-emotion framework. This is the same systematic approach used by the world's most successful hedge funds to strip away human error. By the end of this video, you will understand how to stop being a victim of your own biology and start operating like a cold-blooded algorithm. Why your emotions are stealing your wealth. Think of your financial health like a complex system of arteries. When everything is flowing smoothly, the system is healthy and your wealth grows. But every time you make an emotional decision, like panic selling or chasing a meme stock, you are creating psychological plaque in your system. Much like how a toilet gets clogged when things that don't belong there are thrown in your trading account, gets clogged with regret and hesitation. This psychological plaque starts soft like a vulnerable pimple under the skin, but over time it hardens into a bias that blocks your vision. You begin to see what you want to see instead of what the data is actually telling you. I have seen countless investors struggle for years because they are stuck in a feedback loop of their own feelings. They feel that a stock is too low to go lower or too high to go higher based on nothing but a gut feeling. The truth is, the market does not care about your feelings or your cost basis. The institutions at Wall Street actually rely on your emotional outbursts because that is where they find their profit. They are the house, and if you are playing with emotion, you are just a gambler at their table. Your current medications for your financial stress, like checking the news every 5 minutes, are just a little life raft in a stormy ocean. What you actually need is a yacht built of logic and data to cross this ocean safely. Pillar 1 Rule-based logic. The first step in our framework is moving from discretionary trading to rule-based logic. You must treat your investment strategy like a recipe that must be followed to the letter. Instead of saying, "I think this stock will go up," you must say, "If condition A and condition B are met, then I will buy." This is what I call the fork and knife approach to investing. You are using these tools to cut through the noise and consume only the high-quality data. When you have a predefined set of rules, you are removing the need to make a decision in the heat of the moment. The decision was already made when you were calm and rational. Think about how a pilot flies a plane. They don't decide what to do when an engine fails based on how they feel that day. They follow a checklist that was written by experts in a controlled environment. Your trading needs a checklist. If the price crosses the 200-day moving average and the volume is twice the average, then I enter the trade. It is simple, but it is incredibly powerful because it eliminates the maybe and the what if. When you systematize your logic, you are building the foundation of your own personal quant model. You are no longer a person trying to guess the future, you are a system executing a plan. Pillar 2. The power of backtesting. Once you have your rules, you need to know if they actually work before you risk a single dollar. This is where backtesting comes in. Backtesting is the process of applying your rules to historical data to see how they would have performed in the past. This is how you build a real sense of faith in your system. Most people have faith in their gut, but your gut has no data to support it. Data-driven faith is different because it is based on evidence. When you can see that your strategy has survived 3 market crashes and still came out on top, you will not panic when the next dip happens. You will know that this is just a statistical variation in a winning system. In the past, backtesting was only available to elite quants with supercomputers. But today, the tools are available to anyone with a laptop. You can run thousands of simulations in seconds to find the alpha or the hidden edge in the market. This is your life raft turning into a high-speed vessel. If you don't backtest, You are essentially flying a plane without ever having used a flight simulator. You are hoping for the best, but in finance, hope is not a strategy. By looking at the facts and the values of the past, you are preparing yourself for the uncertainty of the future. This process allows you to find the hidden gems of strategy that others are too emotional to see. Pillar 3. Execution without hesitation. The final and most difficult pillar is execution. You can have the best rules and the best backtest results, but if you cannot hit the button when the time comes, it is all for nothing. This is where the anti-emotion framework truly proves its worth. You must learn to distance yourself from the outcome of any single trade. In a quant model, a single trade is just one data point in a set of thousands. If you win, it doesn't mean you are a genius, and if you lose, it doesn't mean the system is broken. It simply means the probability played out as expected. I want you to think of yourself as a machine. A machine does not feel pride when it works correctly, and it does not feel shame when it encounters an error. It simply follows the code. To master execution, you must stop looking at the dollar signs and start looking at the percentages. When you see your account balance as a score in a game of logic, rather than money for your mortgage, you can act more clearly. You are awakening the giant of discipline inside of you. This discipline is what separates the winners from the losers in the 2026 market reset. The market is designed to shake out the weak hands, and the weak hands are always the emotional ones. By executing without hesitation, you are joining the ranks of the professional quants. You are moving from a state of constant anxiety to a state of calm observation. The future of retail investing. We are entering an era where the old ways of buy and hold and pray are becoming obsolete. The volatility of the coming years will chew up anyone who does not have a systematic plan. But for you, this is an incredible opportunity. While everyone else is panicking, you will be looking at your dashboard. While everyone else is chasing the next hype, you will be following your back-tested rules. You are no longer a victim of the sulua or the big tricks of the market. You are the one with the map. Quantitative investing is not a magic wand that will make you a millionaire overnight. It is a disciplined path to consistent growth and protection of your capital. It is about finding the truth behind the noise and having the courage to act on it. I believe that every retail investor has the potential to become their own fund manager. The technology is here and the data is free. The only thing standing in your way is the biological software in your head. It is time to upgrade that software. It is time to embrace the numbers and leave the feelings to the amateurs. What was the one emotion that cost you the most money in the last year? Was it the fear of losing what you had, or the greed of wanting more than you needed? Think about that answer deeply, because it is the first step to overcoming it. In my next video, I will show you the specific free tools you can use to start backtesting your first strategy today. Stop guessing and start knowing. The data is waiting for you. Content for informational purposes only and does not substitute medical or professional financial advice. Please consult with a professional before making major changes to your investment strategy.